Hey, what's going on, guys? Bot Mentality here. Today I want to talk about trading this market crash, specifically what I've been doing, and recap one of my losses here on the way down, and also talk a little bit about how I'm trading this. I want to make kind of a two-part video series, so I want this video really just to cover in general, why was it this is so bad, or why have so many traders actually blown up their accounts because of this. Just talk about my specific trade and a little bit about the mindset that I've had to adapt during this market crash. This is the first time I've ever traded something of this magnitude, and I think that's the same for many traders. We actually haven't seen something of this magnitude before. There's been a few things comparable, but so far we've beat out everything, right? So, and then maybe the next video, I'm going to talk about specifics, my strategy and how I'm going about approaching technical analysis and responding to news and etc. So, we'll see, guys, but it has been a crazy month, the past month. Absolutely crazy. So, all right. So the first thing I want to jump into is the mindset ahead of this huge crash. We're on the weekly chart right now. The mindset ahead of this was, we're in a 10 years of bull market. We've had 10 nice years. Recently, as of 2019, we've seen every major dip be accumulated. No matter what the news was, the dips were accumulated. They might have lasted 4 weeks here, but then we ripped to new highs. And then we had 4 down weeks, ripped back up, pull back quick, 3 down weeks, and then we had a million weeks in a row of just pure strong green action, right? So the dips were accumulated, bull market. This kind of not seeing anything huge like this or back during this time, it made traders comfortable. It made them overconfident. Your neighbor's making 5% a day or 10% in a couple weeks. People are super excited. So we're seeing more of these companies like Robinhood and different brokerages advertise about trading, and marketing to millennials and to minimum wage workers and like the general youth, right? So we have a lot of new people getting into trading during a time when it was easy to just buy and put your strike out a couple weeks, or just buy stock and then close your eyes, and you might have been unlucky and caught, the top of one of these dips. But if you're lucky enough to catch in the dip, you were up a ton within the next couple weeks. And so you've seen buy being the narrative with comfort recently, right? 2019 into 2020. We saw small dips, due to people were worried about World War III for a little while. We got over that up into this. And we've just been going, right? So 10 years of bull market, everyone had the buy the dip mentality, and that is what killed a lot of traders down here. So because we've seen such a heavy consecutive weeks of just explosive downside moves, if you didn't adapt after the first 2 weeks here, if you didn't change your strategy from buy the dip and hold, you aren't trading anymore. Pretty much, especially for the people for the ad guys who keep averaging down as it goes, they're pretty much done with. A lot of traders blew up their account. A lot of people stopped trading. A lot of people said, forget this. I'll be back in a couple months when this rebounds, right? Some people just aren't trading at all. For me, being a full-time trader, it's my responsibility to be able to adapt my mindset to these scenarios. And I have been able to do that. And I'm pleased to say that I have seen no difference in my month-to-month P&L when we were back here, right, than here. I've been able to make money consistently and meet my profit targets even after this huge drop. But that does not mean that I didn't suffer any losses, okay? So what I want to go into is talk about one of those losses and how I was able to change that mindset that was so detrimental to many traders. Let me mute my phone here for you guys. I didn't think about that before the video, so okay. All right, let's jump into it here. So first, let me tell you about my trade. I'm going to jump to the 180-day, 4-hour time frame. You can see this ridiculous drop, and I'm going to zoom in a little bit here. So what happened was We were up here going for new all-time highs. We hit a new all-time high pretty much every week. So just because I was trading the trend had been buy the dip. Give yourself enough time, give yourself a couple weeks to be right, and buy the dip. And when we return to all-time highs, it's going to be great. One thing I want to talk about before too is back in this period here, we had everyone worried about World War II, right? And then the market pushed back up, and then coronavirus news started here. Now, what's interesting about this segment right here is no one cared. The dip was entirely bought up. So my thinking was if we saw another coronavirus scare, the same thing was going to happen. So that was the level I was risking off of in this prior response in order to get that upside move. I was expecting this retest here of, around this 2300 area, right? And then to move right back up to the upside. And that's not what we got. So we got the pullback. Zoom out, bring it back over here. We got the pullback. You see this red line that goes straight up here, that red, slashes on the vertical slashes on the way up. That marks the day I actually bought this position. As we saw the pullback here in the coronavirus news starting, we saw a pullback to 3,330, which was right in here. We got the open, right here, pullback on this day, right? 2 days down from the high. Let me get back on the daily so I can show this to you here. On this day right here, we got the pullback to these previous highs, right? I'm thinking at worst we might drop down to here and then rebound and head back up, but we should find support there on those previous highs. Got the pullback just a couple days after this news, right? I went ahead and bought the on February 21st, I bought the March 20th 3,400 calls at $18.80, right? Just one contract. So it was $1,880 I put into the trade. And I was expecting, after seeing us go from essentially 3,400 to a low of 3,300, so that's almost a 100-point drop. I'm expecting us to see some rebound. Even if we did get a little bit more downside extension, we'd bounce off these previous lows and then be right back up. And I was willing to wait. That's why I gave myself a month of time. As you can see, as I zoom back out, that is not what happened. We got obliterated, and so did my strike. Now, what I want to say is after I bought this position here on the 21st, it looks funny looking back now, but at the time, this whole move, no one was expecting this downside move, right? Within 3 days of buying this, so 1, 2, 3, we had dropped down to 3,100. Within 3 days of taking this $1,800 position, my option was worthless. It was worth like $100. So this option, because I was wrong, within 3 days, it was worth nothing. Now, the problem is when people trade options or when they trade in general, you don't ever bet the farm on everything. And you can ask my room. I tell them this all the time, and we talk about this. You don't ever bet the farm. That is not what we do. That's something that degenerate gamblers do, is bet the farm. Now, if I would have, let's just say I took this first position of $1,800 and then bet the farm 3 days later, because I was like, there's no way we're going to break this previous low, right? There's no way we're going to break this. Or down here, I said, there's no way we're going to break 3,100. And I bet the farm on that for the V-shaped bounce. And I'm just sitting here thinking, yeah, man, I'd make a ton of money. I'd make 50, 60 grand and whatever. Well, guess what? We rolled over and I lose all my money, right? So never bet the farm. RTZ is called risk to zero. What that means is when you're trading, the option that you buy is your max risk, right? So I bought at $1,880 option. That means at maximum, I was willing to risk that. Okay, that's how I trade. So do not put money into an option contract that you are not okay with it going to zero. That's always been my rule, and that's what I abide by. That doesn't mean I won't stop out of the contract before it hits zero, which is what I often do. But in situations like this, where it's a high risk situation, I didn't think about it was at the time, but regardless, you always buy a contract that is equivalent to the amount you're willing to go to zero if you're wrong on the trade, because you never know more than the market, right? So this position, 3 days in, bam, it's worth $0. Am I stressing? No. Why? Because I'm not going to put money on the table like that if I don't already have the gains to pay for it. So that month, I had already made that $1,880 several times over. Okay, I was not stressing out about losing $2,000. I'll tell you that right now. So that's a risk control method a lot of people don't use and they don't have. And so if you haven't used that, you need to think about doing that. What's important to realize as well, that when you're wrong, think about, okay, why was I wrong? Well, you could say I was too early, but I would say I underestimated the strength of the downside move, or the significance of the situation or the news that came out and the conditions the market was in. So what did that mean? Later on, I did go for another scale in for a bounce, but that I quickly cut just because I had adjusted my mindset that if my dip buy idea on my previous strike didn't work that quickly, if we don't see a significant bounce, I need to go ahead and get out, just because of the fact that the whole mood of the market has shifted, right? And that's what I ended up doing. So because of that loss of the RTZ, I realized I need to readjust my strategy and change gears a little bit. I noticed the consistent news developments constantly changing the sentiment. Like, we're down here, and it's like, okay, we're good, we're not good, and then we roll back over again, right? So, the contract. So I'll tell you right now, that contract a month later expired yesterday, and it's worth nothing. So that was a $1,880 loss that I took. However, those previous gains from February already paid for that. So I'm fine with taking that loss. Now I want to jump in, because we're already at 11 minutes here, to my new strategy. In general, and what I've done to be able to survive this crazy move. Jump back to the weekly chart. To be able to survive this crazy move. So a couple points I have here that I want to talk to you about. You need to understand that when buy the dip stops having meaning and you're not seeing consistency with it like you are here on these weekly time frames, when buying the dip here a week later does not yield you a profit here, and then buying it here and a week later doesn't yield you a profit here, the market has changed. It doesn't look like this anymore. We're not doing this anymore. The market has significantly changed. I recognized that early on, so I stopped trying to predict price action weeks out. I stopped with that. Yes, we were oversold on every indicator when we hit 2,900, and we did see a small bounce, and even at 3,100 we were still oversold, but that didn't stop us from rolling over. If I would have took a strike here, let's say I rebought the same strike, right? Those 3,400s. Yes, I would have been up here in a week, but 2 weeks after that, I would have lost all my money again. Less than that, a week and a half after that, I would have lost all my money again. So buy the dip is not the mentality that we had in the previous year of that consistent bullishness is not here right now. It will eventually return, but the window for the buy the dip mentality has shortened significantly. And adjusting to my trading to that is how I was able to keep trading, right? Or even take the other side of shorting the pops and being able to recognize that there's more edge in this downtrend, this daily downtrend that we're seeing, than the upside, okay? In this trading the channels, trading the technicals. So that's the first thing, is your mindset. You do not know more than the market. So when what used to work isn't working anymore, you need to change your plan. Shorten your focus. That's what I did. Instead of trying to trade, I bought a month out. I'm not really looking to buy contracts that far out. I'm looking to trade the shorter term moves. So like intraday, maybe to the next day, maybe for a couple days out. But the majority of my trades recently have been intraday scalps. Right? If I bought an expiration of over 2 weeks out, it's mainly just because I'm looking for protection in case I feel like, well, I might need to give this, a little bit more room for that rebound. In that case, I go smaller size, and I always am okay with that RTZ idea, that risk to zero I talked about earlier, because the number one rule in the game in this market right now is controlling your risk, right? So I've shortened my focus. I'm looking for intraday setups. I've gone back from a swing trader mentality mainly into a scalp mentality, just because of the crazy volatility we've seen. On this weekly chart, it looks like, straight down. But then when you zoom in here on the 20-day, you'll see that there's actually a lot of chop, right? So, up, down, up, down, up, down. And this can wreak havoc on your P&L. If you bought, let's say if you, you pulled back and you shorted here and you go up, right? Pulls back, the implied volatility increased, right? You're not really up too much, and then you just rip back to the upside. Your P&L is going to see wild swings, and that can easily cause someone to be emotional. So in order to prevent that, I'm shortening my time frame. I'm looking to capture a single, interval on on a certain time frame. So like if I'm watching the 15-minute, right, I'm looking to capture a move that's going to move within the next 15 to 30 minutes, right? That's what I'm looking for. If I'm trading the hourly chart, I'm looking to capture a move that's likely to occur within an hour. So I've shortened my expectations, and I'm not trying to just plan the future and guess that, because every time we think we're getting somewhere on these rips, some news comes out regarding infections, corona, deaths, or procedures, and we're right back down to new lows. So I'm not trying to predict, far out on anything. Let's see here. All my scalps are either risk to zero size, or if I use a little bit more size on the scalp, like I would not consider $4,000 risk to zero, right, for me. So if I take $4,000 of equity on a position, then I'm looking to scalp and make, get out intraday. Another big thing that I've changed here during this crazy downtrend is an overnight risk. I've eliminated overnight risk. If you're going, I do take trades overnight. However, what I used to do, and on this trade I took back in February where I lost that $1,800, was I would trade the SPX, so I couldn't exit overnight. I had to wait till the next morning. And the problem with that is if there's a news development or a change, or you could have taken a profit on a shorter time frame on that swing, you won't be able to exit till the morning. And a lot of times you'll see the rebound, like let's say if you get the calls, you'll see the rebound overnight, and then it might dump towards the open. You don't have time to get out, right, for a profit. So I actually jumped over and learned how to trade options on futures contracts. So that gave me a lot more flexibility on my entries and exits with the overnight swing ideas. So I've been having a lot of fun learning that and practicing with that. And of course, less size. You need to be using less size. When you see heavy volatility like this, you don't want to use the same size you were before. You're going to quickly run outside your risk tolerance. You need to downsize a little bit. You need to be patient. You need to cut out the noise and just look for the shorter term edge. At least that's been my strategy. Yeah, technically, if you zoom out, if you would have just bought swing puts here out 30 days, yeah, you would have banked. But it's so difficult looking at the levels of how heavily sold we are and seeing the edge in doing something like that, right? On a big picture idea. You never know when some crazy news comes out and we just rip back to the upside and you get trapped in those. So I'm just shortening my horizons, or shortening my focus, and diving in on this time frame. So this video, it already went on longer than I anticipated, but I think that I gave some good tips. I talked about my trade, talked about how I've shortened my focus, and explained why I'm trading futures contracts, and I'm trading overnight instead of trading the SPX. That's pretty much it, guys. By doing all these things I just mentioned, I was able to consistently make money even during this huge market crash where you're seeing IRAs drop down 30-40%, and people are panicking. And a lot of people are taking heavy losses, even professional traders. And I don't consider myself a professional, but I'm working hard to get there. But I've been able to keep my risk low and continue to profit and rake in my goal profit of every single month. So that's what I got. So I'm gonna make another video here soon, and I'm gonna talk more about where I think we can go from here. Big picture, okay? Just my prediction, right? So I'm talking over the next couple weeks and over the next, 3, 6, 9 months. I'm going to talk a little bit about that. And now, a lot of it's going to be speculation, but I will be acting on some of those bigger picture views just because this is a once-in-a-lifetime opportunity. If you can see here, in the past, 20 years, we've never seen a drop this far and this fast in 20 years, which is effectively my entire existence. Okay, so this is a once-in-a-lifetime opportunity to capitalize on either continued downside or a rebound, and I will be taking part in that. I'm not going to miss that. So, all right, guys, I'm going to get out of here and to look forward to that video next time. Continue to stay focused on developing that bot mentality, which is that trading mentality where you learn to eliminate your emotions so you can trade like a machine, guys. I'm out of here. Deuces.